So good morning and welcome to this webinar on offers in compromise and overview. My name is Jason Bowman. I'm an enrolled agent specializing in IRS collections representation, more commonly known as tax resolution. This is what I've been doing full-time for nearly 8 years. And today's webinar is going to be a very quick overview of the offer in compromise program. This is intended for folks that are not familiar with the offer program, haven't been through it extensively, and want to do more of this type of work. It is some of the most lucrative kind of work that you can do in your tax practice. And so it's worth becoming familiar with the various programs that the IRS has for resolving tax debts. So again, how this works, please stick around for the entire hour, answer the polling questions when they're prompted, write down the attendance verification code words that are presented during the webinar. You'll enter those into a box that you'll see later and be able to redeem your certificate of completion after the webinar. Our course objectives today are to understand the pros and cons of offers in compromise. Yes, there are some downsides to the OIC program. We'll define the different types of offers in compromise. Yes, there are 3 different types. We'll understand what makes an OIC application processable by IRS standards. As you might be aware, the IRS rejects about 60% of offers in compromise. And the reason they reject them is because they're not processable. And that is the reason they're not processable is because they're not submitted properly. So we'll talk about that. Take a look at the taxpayer's responsibilities following the acceptance of an offer. We'll also take a look at software solution that can help automate and streamline the entire process. Definitely make life easier. So first of all, what are the benefits to the offer in compromise program? The first and obvious one is that you get to settle tax debts for less than what the taxpayer owes. So if the taxpayer owes, $2.5 million, but the RCP calculations demonstrate that the taxpayer can only pay $500, then they get to settle the entire $2.5 million tax liability for that $500. Right? That's an obvious benefit. Along with the principal that's due, the OIC program also allows the taxpayer to settle the penalties and interest. So it's not just the tax liability, it's the accrued penalties and interest that also get compromised. It also eliminates the enforced collections activity. So no levies, no wage garnishments, no accounts receivable levies, on a business's customers if a OIC is done. This removal of the enforced collections activity is one of the biggest benefits of the OIC program, because that's the thing that people are most scared of, especially the levy side of things. There's also no limit to the amount that can be settled. All tax types and any dollar amount can be settled. Like I said, a taxpayer can owe millions and millions and millions and millions of dollars, tens of millions, hundreds of millions, and they can still do an offer in compromise. The government can also not later reopen the case unless there is evidence of fraud presented. If a fraudulent offer in compromise is accepted, then obviously there can be litigation down the road on that. For low-income taxpayers, there is the opportunity to waive the application fee and the down payment if they qualify. After the offer amount is paid off, the tax lien is removed. So if a taxpayer, say they owe $100,000, they do an offer in compromise for $20,000 on the 2-year payment option. As soon as they've paid that off after the 2 years on the offer in compromise program, well, the tax lien gets removed. Okay, that is an obvious benefit to the taxpayer. It is also a reasonable alternative to an installment agreement or currently not collectible status. And what this goes down to is the IRS policy statement that you see down here at the bottom of the slide. The goal is to achieve collection of what is potentially collectible at the earliest possible time and at the least cost to the government. So with the Offer in Compromise program, the IRS is essentially saying, look, we will accept whatever we can squeeze out of you today and forgive what we could potentially collect later on down the road through an installment agreement in order to get the money now, because they care more about money now than money 10 years from now. Okay, they have a very short time horizon that they look at in general for the time period over which they want to collect. So there is an incentive to the IRS, and they extend that that benefit to the taxpayers through the OIC program in order to collect as much as they can right away. Now, of course, it's not always rainbows and butterflies and puppies. Okay, there are downsides to the OIC program. A lot of people don't take the time to consider what these potential downsides are. But number one is there's a large amount of cash that can be required at once. This is particularly true if the taxpayer has net equity in assets that they are going to be required to tap into in order to pay the full reasonable collection potential RCP amount that's calculated through the IRS formula, because the IRS won't accept less than that amount. So it is potentially possible that the taxpayer has to come up with a large amount of cash at once. And obviously for some taxpayers, the fact that they are in a tax debt situation in the first place is pretty indicative that they might have a hard time coming up with, a lump sum of cash, or even the monthly payments required over the 2-year payment option on the Offer in Compromise. So that can obviously be a detriment, because if they can't come up with the cash to make the OIC payments, then guess what? They can't do the OIC. There's also an application fee. Some people could think that's unfair. There is the low income qualification that will waive that fee, but a lot of folks don't qualify for it. The IRS is also going to seize the taxpayer's refund for any year in which the Offer in Compromise is being reviewed, and for the next calendar year as well. There is a very, very detailed financial disclosure that is required. I like to use a mortgage application analogy when I'm talking to clients about this, but it is a very far-reaching financial disclosure that's required, and the IRS takes the time to verify the financial information being reported. We'll talk about that later. Payments that are made under the Offer in Compromise program are not refundable. Okay, so once you've started paying, if you stop paying on an Offer in Compromise, you never get the money back. You also don't get to tell the IRS where to apply those payments. Okay, the Offer in Compromise program also extends the collection statute expiration date. This is the 10-year statutory window during which the IRS can legally collect the debt. During the time period an Offer in Compromise is being evaluated, it extends that day for day, and that can be a significant negative. The taxpayer has to be a good little taxpayer for 5 years after acceptance of the Offer in Compromise, because there is increased scrutiny and screening on the behalf of the IRS to make sure that they're, like I said, they're being good little taxpayers. Non-tax liabilities cannot be settled. And if there is a liability in excess of $50,000, the legal opinion of IRS Chief Counsel is required, because the IRS has to consider the potential for litigation on these cases. So it is now time for polling question number 1. Let me bring that up. So pretty simple question here. How many tax resolution cases will you complete in calendar year 2015? So less than 5, 5 to 10, 11 to 20, 21 to 50, or more than 50. Go ahead and put your vote in. Vast majority of you are saying less than 5. 3/4 of you are saying less than 5. So I highly, highly encourage you to take a look at doing more tax resolution work. It's primarily for 09, 10, 11, 12, 13, 14. I didn't even do tax returns at all, period. All I did was tax resolution because it's so much more profitable. But I'll go ahead and close out the voting. And our first attendance verification word is super. I'll throw that into the chat window as well. Be sure to write that down. It will not be repeated later. You'll need that to, and you don't need to type it into the chat window now. That's not what you need to do. You will need to enter that into a special place on cpesuite.com later on to get your certificate of completion. So again, for those of you that are on the phone, it's super, 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 super duper. All right, let's take a look at offer and compromise requirements. In order to just have basic eligibility for even filing an offer and compromise, there are certain conditions that need to be met. First of all, the taxpayer cannot have any delinquent tax returns. So whether we're talking about an individual or a business, all 1040's got to be filed. Substitute for returns, 6020Bs, those do count. So if the IRS filed the return on the taxpayer's behalf, that is acceptable as a filed return. But all 941s, all 940s, all 1120s, 1065s, 990s, 1040s, all returns have to be filed. The taxpayer cannot be in bankruptcy, obviously. Otherwise, the bankruptcy court will be handling the tax debt situation themselves. The taxpayer has to be current with their federal tax deposit requirements if they are a business. And if it's a self-employed person, they have to be keeping up with those 1040 ES payments. The taxpayer must also not be able to pay in full, either with cash on hand or by selling assets. And they can't be able to pay the full liability via an appropriate installment agreement. And then the trust fund portion of any taxes must be either paid or the trust fund recovery penalty assessment has to be made against an individual. So a business cannot compromise their payroll taxes unless the trust fund recovery penalty process has worked its way through. Just so you know, what's common in these situations is the trust fund recovery penalty will be accepted by an officer or shareholder of a corporation, especially an S-corp. Then the corporation will do an offer and compromise on their debts, and then the individual also does an offer and compromise on their debts, which includes the trust fund recovery penalty assessment. So you do a double offer and compromise. That's a pretty common scenario. Other offer and compromise requirements. There cannot be any Department of Justice or U.S. Attorney General activity on the taxpayer's case. So tax liabilities cannot already have been reduced to judgment by a court. There can't be any restitution orders in place. There can't even be any pending litigation, criminal or civil, in regards to the tax periods in question against the taxpayer. Okay, and then the offer and compromise must include all tax liabilities, with the exception of the doubt as to liability offer, which we'll talk about here in a moment. So there are 3 different types of offers and compromise. Normally in the course of conversation, when we say offer and compromise, 99.9% of the time, we are actually talking about very specifically one of these 3, and it's the second one you see here on the list. It is the doubt as to collectability. The doubt as to collectability, offer and compromise, is the taxpayer saying, look, I'm broke. I don't have the money to pay the taxes. You're never going to collect it all from me. Here's what I have. Take it and go be happy, and let's all get on with our lives. Okay, that's the doubt as to collectability offer. And these are processed by collections. There is a little used, I think it's one of the more underutilized tax resolution options in your arsenal, and that is the doubt as to liability offer in compromise. The doubt as to liability offer has a separate form. It's not done on the 656. It's got its own form that you do it on. These are processed by examination. The doubt as to liability offer is exactly what it says. It's the taxpayer saying, look, I disagree with the amount that you say I owe. It is an opportunity for the taxpayer to have a specialist look at their entire situation for the tax periods in question and determine whether or not they actually even owe the money. Okay, the doubt as to liability is underutilized because people think that once they go through the examination process and then they do audit reconsideration, that whatever's left after audit reconsideration is as far as they can go. And it's just not true. If you get through audit reconsideration and you're still not happy with the outcome, then file the doubt as to liability. And in fact, the doubt as to liability offer in compromise is a perfectly acceptable alternative to the audit reconsideration process. But it can be a follow-on. So the doubt as to liability option is the tool that you should utilize before contacting the taxpayer advocate, especially because these days the taxpayer advocate's office is overwhelmed. And if you've gone through examination and examination reconsideration and you apply for taxpayer advocate assistance, unless it falls within their very, very narrow current definition of what they're willing to process at this point, they're going to kick it back to you and say, you haven't exhausted all options within the IRS, so have a nice day, and they're going to basically tell you to pound sand. Okay, so the doubt as to liability offer and compromise is where you should go before the taxpayer advocate, before a congressional referral even, as you're marching down the examination chain. So the third offer and compromise is processed on, it's filed on the 656, the same form as the doubt as to collectability offer, but it's a different checkbox. And this is processed by collections with input from examination and chief counsel. The ETA offers, there are very, very few of them that are accepted every year. We're literally talking 1, 2, 3 of these a year that are accepted by the service. So in general, it's not something that any of us are usually going to pursue. I've never personally done one. The rare situations where these do go through, there's usually some sort of serious medical condition involved, somebody facing a terminal illness, and the effective tax administration is basically just an appeal to the IRS to say, look, somebody's dying, will you back off? Okay, that's basically what the ETA offers are for. I do want to put out a very, very brief word here about the RCP, reasonable collection potential. This is the formula. It is a very mathematical, very discrete formula by which the minimum offer amount is calculated. Okay, the offer and compromise amount, it's not, what they owe times pennies on the dollar. That's obviously not what it is. There is a very specific formula for determining this. It's the quick sale, value of assets, whatever equity is in assets, plus it is remaining income, multiplied over a 12 or 24 month period, adding those two numbers together. That's the minimum offer amount that the IRS will even consider. Okay, beyond the scope of just a 1 hour presentation here, it's kind of an hour or two thing of it, on its own. So on cpesuite.com, we do have an advanced OIC topics course that goes into RCP calculations. But the big thing that I want you to take away from today is that reasonable collection potential must be less than tax penalties and interest. Otherwise, the taxpayer is simply not eligible for a doubt as to collectability offer and compromise. And this is absolutely positively non-negotiable. This is a point that cannot be argued no matter what. So always, I'll repeat that, always do the RCP calculations using the worksheets in the 656B booklet. Always do the RCP calculation. And in fact, I encourage you to do the RCP calculation for every tax resolution case that you do. Because if the amount that the taxpayer owes is more than RCP, then you've got a good offer and compromise candidate. The performance of the calculation itself and doing some other comparisons helps you very quickly to determine the resolution options that are available for the taxpayer. And again, that's a conversation that's beyond the scope of our hour here, but always do those RCP calculations. It is a very valuable number for you to know, all right? And again, you cannot offer less than the RCP calculated number. And if RCP is more than what the taxpayer owes, they're simply not an offer candidate, okay? So don't be telling them that they are. Don't be one of these fly-by-night tax resolution companies that's out there selling everybody an offer and compromise, right? That's why there's so many offers that are rejected. So it is now time for polling question number 2. Let me bring that up for you. And pretty simple here, similar to the first question. What percentage of your current revenue comes from IRS collections representation? Up to 10%, up to 25%, up to 50%, up to 100%, or 0. I do not currently offer tax resolution services. And again, tax resolution is a great service to offer, especially if you're sick and tired of tax season. Tax resolution is the service that allowed me to travel around the world for 3 years while continuing to service my clients and make a good living from the road and from airports and hostels and whatever. It was a great lifestyle driver. Highly encourage you to consider adding this service to your existing practice if you don't do very much of it. All right, go ahead and stop the voting here. And our next attendance verification code word is pencil, P-E-N-C-I-L. So for those of you on the phone, P-E-N-C-I-L. Be sure to write that down for attendance verification purposes. I also put that over in the chat window. So let's talk about processability. A lot of the offers that the IRS receives are simply not processable. And there is a two-stage process at the IRS for evaluating offers and compromise application. There is first a process examiner that makes sure that all the T's are crossed and the I's are dotted. And then, and only then, does it go to the offer examiner, who is the person that actually does the asset verification, the financial analysis, all that fun stuff, and makes a determination, okay? But the process examiner is going to do certain things to make sure that the application even meets the IRS's standards for processing. So they're going to check the compliance history, okay? Generally, especially on the 1040 side, they're going to look back 6 years. So if you have a taxpayer that hasn't filed a tax return in 20 years, then at a minimum, the IRS is going to expect you to file the 6 most recent years worth. And then they're in the majority of situations, not always, but in the majority of situations, they're just going to look the other way on anything older than 6 years if they haven't been filed. So remember, they've got to be making federal tax deposits. They've got to be making their estimated quarterly tax payments if they're self-employed. And they got to have all these returns done. Also, any existing levies are going to stand. So if they've been levied and you haven't gone through a levy release process, then those existing levies are going to be maintained. The offer and compromise process does not release existing levies, okay? But new levies will generally be prohibited unless there is a determination of jeopardy, and jeopardy is beyond the scope of our presentation today, but if there is a determination of a jeopardy situation, then levies can proceed during the offer and compromise evaluation. On business offers, particularly with payroll taxes, the trust fund must be either paid or personally assessed against an individual. For individual offers, if the individual has a 1040 debt and a trust fund recovery penalty debt, for example, then the trust fund recovery penalty debt must be included on their offer and compromise. And in fact, all tax types, for all tax debts, for all tax periods, must be included on any offer and compromise. So the process examiner is going to look at the taxpayer's compliance history and make sure that these factors are all in place. Other things that they're going to look at, they are going to make a determination of whether the offer and compromise application was filed for no other reason than to delay collection. And what they're going to do is they're going to look at the case notes. They're going to be looking at if there was a revenue officer involved, they're going to have the revenue officer ship them the physical paper file from the field. They're going to look at what actions have been taken by the revenue officer, by the IRS, by the taxpayer, to make a determination of whether the offer and compromise is being filed for no other reason than to stop levies from being filed, for example. If there is an application fee required or a down payment that is required by the taxpayer, if that's not missing, if that's not present, then the process examiner will send a letter out saying, hey, you got to send us money. They're going to check PACER, the federal court record electronic system, to determine if there's a bankruptcy in progress. If there's a bankruptcy filing in progress, then the process examiner is going to reject the OIC application. If the Form 433A or B is missing any information or any supporting documentation, the process examiner is also going to send a letter out saying that the offer and compromise is not processable and give you the opportunity to fill in those information gaps. So real quick, in the interest of time, I can't go through this to the extent that I would like to, but real briefly, the offer investigation process. The big picture to remember here is that the IRS verifies everything that you report, and they assume that you are lying on the Form 433, okay? And don't forget that the offer examiner is going to crunch their own calculation of the RCP. So if that calculation shows the ability to full pay, then the taxpayer is obviously not an offer candidate, and the offer will be rejected. Offer and compromises are based, the financial analysis is based on a 3-month period. So this obviously makes sense that if for example, you know a client is about to lose their job, right? Well, to make them a better offer candidate and reduce their offer amount, it's going to look better if you file the offer and compromise 2 or 3 months after they get laid off, because then they're going to have that 3-month window of significantly reduced income. So that's going to make their offer amount lower because it's going to decrease RCP. That's just one example. Or if you have a taxpayer, a business client that has any sort of seasonal fluctuation in their business, that seasonal fluctuation needs to be disclosed, and it'll be a topic of conversation and negotiation during the offer investigation process. But the best thing to do is to file the offer and compromise immediately after the bad season so that you can show 3 months of the bad time of the year. Okay, so there's some timing that can help you out with the filing and investigation process. Real quick, some of the things that the IRS is going to do in order to verify assets. They're going to delve into a lot of public records databases. The IRS subscribes to commercial databases, okay? They also have access, obviously, to public records. They're going to look through DMV records looking for vehicles that you haven't listed. So if they do a DMV search and they find that Ferrari F40 that you didn't put on the 433A, you're going to get a little nastygram from the offer examiner. They're going to look for UCC filings that show any indication of additional assets or money that you may have borrowed. They're going to look through real estate records. They're going to look in court records. They're going to pull credit reports. They're going to use these commercial tools such as Kelley Blue Book, realtor reports, property valuations to make sure that you have stated a proper value of an asset for arriving at the RCP amount that you're offering. If an operating business is offering out, then expect a revenue officer, even if they're not assigned to the case, expect a revenue officer to show up and make sure that you don't have, a private jet being stored, somewhere back behind the office, okay? If anything is missing, the IRS is going to contact you. Big thing here, deadline management is critically important in tax resolution in general, particularly important when you're dealing with appeals or offer examiners, okay? Particularly important there. There's going to be wage and income verification involved. The IRS is going to make third-party contact. They are going to check information returns that are in the BMF, IMF computer systems at the IRS to verify income. Don't be surprised if a bank receives a financial summons from the IRS, okay? This is all a normal part of the offer investigation process. Now, when you are negotiating on behalf of your client, what's going to happen is you're going to argue to make the assets not worth anything, okay? And you're also going to be looking at maximizing the allowable living and business expenses. This is where the negotiation with the offer examiner centers. And honestly, these are some of the most fun conversations that you'll ever have doing tax resolution work. This is fun stuff. So this is where your negotiation skills come into play. Now, after an offer in compromise has been accepted by the service, the taxpayer has some pretty stiff responsibilities that they have to own up to for a period of 5 years. First of all, the taxpayer has to file all of their future tax returns on time. Nothing can be late, ever, during this 5-year enhanced scrutiny period, okay? All returns filed on time and paid in full. A little business tip for you, make sure that you have automated follow-up systems in place to re-engage with your approved offer clients so that you can help keep them in compliance. And by the way, that monitoring service, that advising service, that's something you should be charging for. So a little bit of a business and revenue advice for you there. Don't forget that the IRS will keep the following year refund if there is one due. So this is a tax planning opportunity for you to make sure that, if an offer in compromise, for example, gets accepted today for a client, then they're going to seize whatever refund is due to the taxpayer on their 2015 tax return when you file it in 2016. Okay, so they're going to keep the refund that the taxpayer is expecting next year. So you can advise the client on how to set things up so that they're not due a refund, right? Penalties and interest will continue to accrue until the terms of the offer are met. These accruals will not necessarily be posted to the taxpayer's account, right? So whatever offer amount, whatever debt amount is being settled is the amount that's going to be settled. But the penalties and interest will continue to accrue and will get tacked on to the overall tax liability if the taxpayer blows up their offer. Okay, and the failure to meet those offer terms will reinstate the full liability with those additional accruals of penalties and interest. And also don't forget, the tax lien is going to stay in place until the offer amount is paid in full. And that tax lien is going to stay in place throughout the OIC evaluation process. It's going to stay in place while the taxpayer is making payments, either on the 5-month or the 24-month payment option for the doubt as to collectability offer and compromise. That lien is going to stay in place. The only way it's going to go away is if you can demonstrate that the only way that they can access the funds to tap into assets and equity, for example, is to do something with the tax lien. And then you might be looking at a withdrawal, subordination, or discharge situation. So the only way to get that lien released or removed or get it out of the way, it's not going to be released. To get it withdrawn, discharged, or subordinated, you're going to have to demonstrate that doing so will facilitate collection. It has to benefit the IRS in order to get that lien out of the way. So just some helpful tips for you for working with your offer and compromise clients. So take the time to make sure that you have maximized the allowable expenses. So obviously, the IRS national standards apply for 1040 debtors. Fighting for business expenses on the business side. Make sure that you fight for every expense on behalf of your client. At the same time, minimize income. The best time to file an offer and compromise is, like I said earlier, during the slow time for a business, during a period of unemployment or underemployment for the taxpayer. The absolute best time to ever file an offer and compromise is when somebody's broke, owns nothing, they're homeless, they're literally flat broke and underemployed. Okay, so that is the absolute best time to file an offer and compromise. Of course, don't hide assets. The IRS will find them. Make sure that you go through the trust fund recovery penalty personal assessment process. So if the taxpayer has a business interest in a business with 941 liabilities, accept the trust fund assessment, put them onto the personal offer and compromise. Vice versa, if the business is filing an offer and compromise, you have to assess the trust fund against somebody or pay off the trust fund. One of those two things has to happen. Be sure to take care of all tax accounts at the same time. Include all the financial documentation that needs to go with the initial offer and compromise application. If you wait for the offer or for the process examiner to get back to you and say, hey, we need this, 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 and this, all it's going to do is delay a process that already takes way too long. Okay, typical offer and compromise process is 6 to 12 months. So if you're and keep in mind, the CSAT is extended day for day during that process. So it behooves you and your client to accelerate this process. So make sure you include all financial documentation with the 656 when you send it in. And then don't forget the RCP. Does your client actually even qualify for an offer and compromise? Don't file an OIC application if the client doesn't qualify. Do the math ahead of time. And I'll tell you, this entire process is a lot easier, faster, and more efficient if you don't do it by hand, okay? If you use software tools to help you do this, the whole thing will go a lot faster. My favorite tool for this is canopytax.com. It is a cloud tax resolution platform. And on average, it saves me 5 hours per case. And it helps me to avoid a lot of the worst parts of being in the tax resolution business. So major pain point is chasing down clients for financials. If you've done any amount of tax resolution work, you know that chasing down this financial information from clients, it can be a sticking point in the resolution process. So Canopy offers a really nice client-side, web-based, secure portal where they can enter in all their financial information. All you got to do is send them a link to get them started. Canopy does the RCP calculations. And if you're doing this on a paper 433A or B, doing the RCP calculations can take, half an hour. But if you just let software do it all for you, it's a huge time saver. And any amount of time that you save means that you can actually go out and make more money. Okay, so this helps your bottom line. And last year, when they were still going by the name of Beanstalk, before they changed names, I was having a conversation with the founder, Kurt, and I was like, I do 941 work. I don't do 1040 representation very much. 95+% of my business is 941. So in order to use your platform, I need the 433B. I need the business side, the payroll tax side of all the paperwork and the forms to be there. And within a couple of months, it's no small effort to add things like that to software. But within a couple of months, they have that all put together for me. So made the platform even that much better for those of us that do 941 representation. And information, for example, from the 433B, it flows over to the RCP calculations and then to the 656B. Now, you can sign up for a free trial of Canopy at canopytax.com. And we do have Ted from Canopy that has joined us. So Ted, I'd love it if you could show folks some of these features I was just talking about that saved me a lot of time. Could you kind of walk us through what that looks like?
Absolutely. And can you hear me okay?
I can hear you good, yeah. If you just want to take over the screen control so folks can see your desktop.
Indeed, I do. Okay, so hopefully you can see, I've got our webpage pulled up, canopytax.com. Just want to make sure that you can see that, and assuming everyone else can as well. Perfect. Well, again, thank you so much for giving us some time, and thank you to all of you for spending some time with Jason and us today. So again, we want to just make this very brief and show some of the core things that Canopy can do to help you save time, build your business faster. So as Jason mentioned, you can try Canopy for free. Head on over to canopytax.com. You simply click try it free, enter a name, phone number, pretty basic stuff, and you're good to go. So that's all it takes. So that said, let me jump in here. Once you're logged into Canopy, just to orient you a little bit, this is what you're going to see. You'll notice that you have a full client list with basic information about contacting them if they owe you money, because obviously you don't want to work for free. So really convenient tools to make sure that for the work that you have performed, you're keeping on top of everything. You have a lot of features in here for billing, for following up with tasks, keeping your life and your appointments straight with a calendar. But for the purpose of this brief demonstration right now, I want to just cut right to the tax resolution workflow. So let's pretend that a client walks in, you're following some of Jason's recommendations on marketing your business, and somebody walks in the door or calls you up, and imagine how powerful this is from a sales perspective, that you can, within, for the most part, about 30 seconds, create a new client, add in their phone, their email, their address, all the core details. You can invite your client to Canopy, and they're going to get set up with their own secure portal that you can share files back and forth. You can track down a lot of financials and other information, as I'll show you here momentarily. So you simply put in their email address. I'll just create a fake one here for our client, Harrison Ford. So literally within the 30 seconds that it took me to create this client, I have now presented them with world-class technology that's going to shine very well on you as a professional. And you have all of these different features to keep organized: files, notes, and then obviously specific tax resolution engagement workflow. So all I have to do is simply create an engagement. Canopy will ask you whether or not this is an individual or a business taxpayer, and let's just say for fun it's an individual. You can give this a name, so let's just call this the Bowman engagement. Add a description. You can work towards a due date and go ahead and create. So again, we're literally minutes into this process, and you have now provided your client with world-class software and a very professional client experience to make sure that they feel really comfortable with you as their professional. Let me jump out of this. This is just a support channel. We have really great support to make sure that we always help you get the most out of Canopy. You'll notice once you're in here, you've got an overall summary showing due date, the progress to being completely done, and the different steps that you need. So putting a power of attorney in place, collecting all your client's financial information, and then analytics. So this is what I'm going to show you next. If you don't mind, I'm going to jump into a different client real quick, just so you don't have to watch me type in a bunch of new information and help you get a better idea of how Canopy works a little bit faster here. So here I'm working with Benjamin Franklin. So I jump in and we've been working towards this specific due date. You can see any progress, how things are going. So over on the left-hand side, we're obviously viewing the summary stage. And the next step is planning. And the way that planning works is a really simple step to go in, view a survey for a power of attorney, and we're going to collect all the basic information that we need from your client to then automatically populate the 8821, the 2848. So if I jump back to this planning step with that power of attorney survey being completed, you'll notice that my 2848, I can include myself as a practitioner, and Canopy will remember your CAF, PTIN, and other contact information that you need to put in here. And again, all of that is completely populated and ready for you automatically. So now that you have you can officially represent this client, you move into the next step over on the left-hand navigation, which is collections. You'll notice that collections has 3 core steps: the client survey, the analytics, and then the IRS forms. So with this survey in particular, I can see that it's completely done, all of the subsections. If I want to go into the survey, then you'll notice that we're starting with general information, marital status, dependents, and moving quickly into collecting all of your client's asset, income, expense information. Canopy will literally walk through what information you need. And the best part is, and again, jumping over and trying to keep things pretty quick here, your client, with that client portal that you set up with them in about 15 seconds, they have access to this survey as well. So they're going to see the exact same thing you see. They're going to have all the same questions. And the idea is that you can now collaborate closely with them with really the goal in mind to get them to complete as much of this information on their own as you can. Like Jason said, it can save you hours per week per client. So just for the sake of jumping back over to the tax professional's view, which again, for the sake of the survey, is the exact same thing your client will see. The way that, well, for one, a lot of your clients are folks that they're behind on getting this information in the first place. So one way that we make it really easy for your clients to actually use this and make it realistic for you to offload a lot of this work to your client is through the smart logic that we've employed here. So notice that if I answer that I'm single to this marital status question, all the other questions disappear. But if I'm married, I get this drop down of information that now drills down and says, great, you're married, perfect. Let's find more out about your spouse. And we use that same smart logic everywhere throughout the survey so that we're never asking your client a question that does not apply to their specific situation. So it's not that, proverbial stack of you're closing on a mortgage and you get this massive heap of papers and there's all these yellow sticky notes that tell you what to skip over and what needs a signature. Canopy will do that in a very smart virtual way and make it really simple for your client. The other nice thing about our survey is that it's not just collecting fields of information. It has IRS standards, like for housing and utilities by county, and it'll automatically calculate those things for you so you no longer have to scramble and figure out what IRS standards are for every single client wherever they might live that you're working with. Once that survey is completed, you jump into the analytics, and you can simply toggle through an offer in compromise, a payment plan, a currently not collectible status, and Canopy will immediately tell you the potential savings, whether or not they qualify, if this makes sense to pursue it. It's going to flag anything that looks suspicious that you need to take care of, like unfiled tax returns, housing standards, low income certification, anything at all that needs it needs a little bit more buttoning up before you submit this to the IRS. And then, of course, your next step, now that Canopy has helped you crunch the numbers and figure out, again, if an offer in compromise or an installment agreement makes sense, then it's time for paperwork. And instead of filling this out yourself with, an editable PDF or even slower, by pen and paper, you jump into this IRS Forms section, and Canopy has already completed all of the information for you. So, for example, the 433A OIC. We're pursuing an offer in compromise, great. And you'll notice that all of this information is completely populated. And again, more than just populating fields, we've even taken into account tax calculations. Like, for example, for an offer in compromise, the first $1,000 of cash is exempt from the calculation. So you'll notice that they have $10,300 of cash, $9,300 of which is going to actually be factored into the paperwork and the calculation. So Canopy will save you a ton of time populating all the forms. And as you can see, we have full coverage of the 433 series for both individuals and business taxpayers, the 656, the 9465, anything else needed, again, for an offer in compromise, installment agreement, currently not collectible status, etc. And over the coming weeks, very kind of short term here, we're going to be adding many, many other forms to support workflows for penalty abatement, innocent spouse, and a lot of other non-collections representation work that you might do. So obviously there's, we could talk for hours about the different elements of Canopy and how it'll hopefully save you a lot of time and help you make more money and be more successful with your resolution work. So I guess I would just summarize a lot of those features with, all the calculations, the work, the submission to the IRS. That's half the battle, but then you need to represent your client, keep them in the know, be the middleman. And that's a lot of work, and there's a lot that can slip through the cracks. So with Canopy, you've got really simple tools to help you manage tasks or take notes for every single phone call that you're on. You have unlimited file storage. So, if you use ShareFile or all these other expensive services, Canopy literally includes unlimited file storage for every single one of your clients. So you can store, W-2s or past tax returns or other bank records or different information, and then choose to share that with your client or not. Just a lot of really convenient features all in one simple, organized place under one roof to help you manage your business effectively. As Jason mentioned, we'd love for you to try Canopy. We've worked with him to offer you an extended free trial. So if you head over to canopytax.com, as I showed you, you can click the Try It Free button. If you enter the promo code, we'll make sure to get you the full 30 days. That we've worked out as kind of a special trial period with Jason. So again, head over there either now or after the demonstration or after the meeting. We'd love to hear from you. The other thing is we have a full team of consultants that are happy to help you with a personalized web demo so that we can more or less continue this conversation that I've kicked off here, but make sure to do it in a personalized way, talking about your specific business and how Canopy can help to make what you're doing more efficient, more enjoyable, and hopefully more profitable for you as well.
Thanks, Ted. I really appreciate that. I appreciate you being on and showing folks how this works. And like Ted said, if you want to continue this conversation, I would suggest that you reach out to him. Ted, is there a way that folks can get a hold of you or one of the other reps directly?
Yeah, so you're more than welcome to email me directly at it's just Ted, T-E-D, like teddy bear, Ted at canopytax.com. That's one way to reach me directly. Also, if you sign up for the free trial, we obviously want to make it really, really simple to interact with us. So we'll reach out and do the work to make sure that we do get something scheduled to help you out. And a final quick little plug is, again, once you've signed up for the free trial, in the lower right-hand corner of the application, I think you can still see my screen. If you click that little question mark and start a new conversation, that literally pings our entire company. We love for our engineers, our product folks, our sales folks, our support team to see the types of things we're hearing from our customers. And I think we do a really good job of listening to them and shaping as much as we can Canopy to their needs. But this is how we manage support and just any other questions of any type. So that's a really slick way to get in touch with us right inside the application. If you are not inside of Canopy, when we respond, the response will be forwarded to your email. So again, a pretty slick way to get in touch with us there.
Perfect. That's good to see. I know you guys you're big on customer support, and which I really appreciate. You guys are always on the ball, and that's important when you're trying to learn how to use a new tool, because obviously, there is a learning curve, right? So having access to you guys is good, and always been impressed with how responsive you guys are. So
thank you very much, Jason. We appreciate it, and thank you to everyone for listening.
Thanks, Ted. Appreciate it. Do you want to put up our next poll so we can kind of stay on time here as we near the top of the hour? So poll number 3. Which of the following solutions do you currently use to manage your tax resolution workflow? I was just kind of curious what other folks were using. If you already use Canopy, go ahead and select them. That's the one I'll be putting in here. Pitbull, IRS Logix, paper files, or nothing. I'll tell you, if you don't have a system at all, I think that's even worse than using paper. I run a paperless tax office myself, 100% paperless, and Canopy is one of the solutions that allows me to do that. So if you either have no system at all in place, or if you're using paper files, I highly recommend that you check out Canopy. So I'll go ahead and stop the voting here. And our last attendance verification word. Let me bring the slides back up. And our last one is cow, as in moo, moo cow. So COW, cow, is our final attendance verification word. So thanks everybody for attending. Thanks Ted for being on. Appreciate your time in the demonstration. Thank you for Canopy for being with us and sponsoring today's webinar. Again, take them up on that offer and talk to Ted or somebody else on their team to extend that 14-day trial to a 30-day trial. They'll set you up with that. Again, highly encourage using some sort of system to manage your tax resolution casework. It just makes the whole process so much easier. Okay. So there was a question regarding the promo code. They'd put up CPA Suite, but tisk, we are CPE Suite, but their system, they'll set that up so they can recognize either one. So regarding the trial code, CPA Suite, CPE Suite, either one will get you that full trial. Thanks for clarifying that, Ted. Appreciate that. So your certificate of completion redemption process. Let me put in the URL. This URL that I'm putting into the chat window right now, if you click on that link, it will take you to the page that you need to be on our site in order to begin the certificate of completion redemption process. If you are already logged in to your account, then clicking the green button will take you to the page where you enter in the 3 attendance verification code words from today. So you'll end up on a page that looks like this, where you enter the attendance verification words. Then you'll be on the redemption page. Click the green redeem certificate button. And if you don't have your profile completed, it'll ask you to update your profile. But if you do have your profile filled out, you just hit the redeem certificate button, send it to yourself, and it'll be sent to you in your email. Okay, so if you already have an account on cpesuite.com and you're already logged in to that account in your browser, it's literally just a few clicks. It's a very simple process. Use the link over here in the chat window. That will take you directly to this page you see on the screen, and then just hit the green click here to continue button. So if you are on the phone and so you don't see the URL in the chat window, what you can do is go to getmycpe.com. I registered that domain yesterday, and all that's going to do is forward you to the page that I put here in the chat window. Okay, it's just a shorter version, and it'll forward. That's only going to work for today, though. All right, because we do these webinars every day, so I got to change it every day. But if you're on the phone and so you can't see the link to the certificate of completion redemption page, then just hop on your computer, go to getmycpe.com, and that will just forward you to this exact same URL. Click on the green click here to continue button, and it will offer you the opportunity to either log in or create an account. So if you don't already have an account, enter your email address into the box here, click on the Get Started for Free button. A temporary password will be automatically emailed to you. And so you'll create your account and you'll be automatically logged in, okay? And then you'll be dumped back to this page. You're logged in now, so just click the green click here to continue button again, and that'll take you to the box to enter the attendance verification words. Enter the 3 words into the same box. Enter them in order, okay? So enter them in order from what they were presented today. So that's why I was telling you at the beginning to write those down, because when you get to this box, you'll need to enter them in order. And in fact, it doesn't matter if you capitalize them, whether or not you put the spaces between the words or not. That part doesn't matter, but you just need to enter the 3 words in order in that box, okay? That's all you got to do on this page. Then click Submit, and then you'll be taken to this page here, and just click the Redeem Certificate button at the bottom. If you have not filled out your profile, obviously we need, like, if you're an EA, I need your PTIN, and then we ask for some additional demographic information as well. That'll all be in the profile, so be sure to complete that. And then once you hit your profile update, you'll be taken back to this page. You can hit the Redeem Certificate button again, and you'll be able to send your certificate. Lance, here's the direct URL again. So if you click on the link that I just put into the chat box, that will take you directly to this page here. Okay, and then once you're on this page here, just click the green button, and that'll get you into the process. The other way to get to this page, by the way, is to go. Let me turn on my own screen sharing here. And by the way, if you have questions, if you're having any difficulties on this redemption process, I'm going to stick around on the webinar for another 15 minutes or so to help you out and make sure you get your certificate of completion. So let me put on my screen sharing here. So hopefully everybody can see my screen. So if you're just on our homepage or anywhere else on our page, you can get to this exact same page by clicking on courses. Going down here, click on live webinars, and you'll see some of the webinars that we have coming up. If you want to attend any of those, you are obviously welcome to. But for today's webinar, it's the Offer in Compromise overview. I'll click on it. And then if you haven't already been through the process, this button here will say start. And that takes me to this page as well. So that's the alternative way of getting here. But the link that I put into the chat window takes you directly to here. I was just trying to save you a few clicks is what I was doing. But again, you can get there by clicking on courses up here at the top. Click on live webinars. Click on today's webinar. Click start, and it'll get you there as well.